India, I don't know if you read the reports, but it ramped up its silver buying by 50% this year compared to last year. So it's pretty impressive. We all know that. India announced that it's going to allow its citizens to use up to 10 kilograms of silver as collateral within their banking system. I think silver is making a lot of headway. And given the fact that we talked off camera that reverse repo is now sitting at almost zero,
Yeah.
liquidity is not at its highest in terms of gold will drag its feet as long as possible in terms of any sort of export control on gold. But for silver, frankly, I can see it happening very soon because China already did it. China already announced that on January 1st is going to start export controls on physical silver.
Yeung highlights a significant shift unfolding across Asia's precious metal landscape, with India and China aggressively moving to secure physical silver. India has increased its silver imports by more than 50% compared to last year, signaling rising demand from both investors and industry. The government's decision to allow citizens to use up to 10 kilograms of silver as banking collateral marks a structural change, one that elevates silver's role within the financial system itself. At the same time, liquidity in global markets is tightening, with reverse repo balances nearing zero, creating a challenging environment for gold flows but opening a window for silver to gain strategic importance. China has already taken a decisive step by announcing export controls on physical silver starting January 1st, a move that could further restrict global supply and accelerate the metal's revaluation. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Actual central bank or whichever country that is buying physical silver potentially as collateral on top of the physical gold that they're buying. Other than India, we all know that India is doing it. And like you said, Saudi Arabia did it with SLV. So we'd love to review that, but if I do it, then I won't get any more information from my sources,
Right.
right? Because they told me explicitly not to review it. But anyway, like when I heard the story, I thought it was pretty astounding because it's not like a small country that is doing it. It's actually a heavy hitter that is doing it. And then the person who reviewed this to me is very connected, with bankers in Switzerland, etc. I'm not going to go further than that. And they have sources and they know, when these central banks are making a move. For example, I reported from the same source, by the way, that South Korea bought around 50 metric tons of gold from the SGE.
Mm.
Okay, like around 2 3 weeks ago when Cambodia bought around the same amount. Okay, so this time, we're talking about silver, and the person who reviewed this to me also said that, well, the reason why the heavy hitters are beginning to look at silver and buying silver as a potential collateral on top of gold for the future, monetary system, monetary system that they're trying to implement, is because India is doing it. India, I don't know if you read the reports, but it ramped up its silver buying by 50% this year compared to last year. So it's pretty impressive. We all know that. And India announced that it's going to allow its citizens to use up to 10 kilograms of silver as collateral within their banking system. So that's, again, very impressive because, as we all know, silver has been kicked out of the global monetary system almost 100 years ago. So now we're seeing like initial steps of getting physical silver back into the banking system. Now, the way I see it, Jesse, is that a lot of the global south countries might be physical silver rich, but they are not physical gold rich. Okay. So they mine a lot of silver, but they might not be mining a lot of gold. So it does make sense for the BRICS Plus for China, Russia, and India to potentially use physical silver as collateral on top of physical gold, just to widen, the breadth of their collateral, their system down the road.
Yeah.
Liquidity is not at its highest, let's say. The fact that gold and silver rebounded so quickly and so strongly is telling us that the physical gold and silver liquidity contraction is actually at a more dire level compared to the US dollar liquidity contraction. So I look at, Jesse, I don't know if any of you guests look at things like this, right? In this manner, but I look at US dollars, gold and silver in comparison. So I I use the word relativity because that's what it is, right? Everything is relative. So a lot of people say, well, US dollar liquidity is contracting, so everything is going to fall in terms of price, right? Yes. But what if the underlying commodity, the source, like I said, the free flow at the LBM is almost zero or zero, right? What if the underlying commodity liquidity is actually contracting faster than the US dollar liquidity? What happens? Then we see what we see now, right, Jesse? Which is everything is falling, but gold and silver is actually going up. So I read more into that, and I heard, and again, unconfirmed as of right now, is that Indonesia is thinking of like taxing so unrefined gold that is leaving the country. So Indonesia, what it wants to do is to set up its own refining center, like smelters and refining within Indonesia. And that makes sense, right? You want to, tax the unrefined gold so that the stuff get refined locally, and then once it's refined locally, then maybe they have like a on like the SGE, right? They have like a system where if you have like a permit, then you don't get taxed when it leaves the country, right? So I think it's really smart of Indonesia to do this. And I don't know if you know, Jesse, but like the US, USGS, US government recently finalized silver to be a strategic mineral, right?
Right. Yeah.
So it's possible that the US does the same thing for silver. It's difficult for gold for the US because the US dollar is the global reserve currency, and it's initially spun off from gold, right? We all know that the Nixon shock in 1971 when they closed the gold window. So I think the US, in terms of gold, will drag its feet as long as possible in terms of like any sort of like export control on gold. But for silver, frankly, I can see it happening very soon because China already did it. China already announced that on January 1st is going to start export controls on physical silver.
Yeung outlines a significant shift unfolding behind the scenes as several large nations quietly accumulate physical silver. Not just India, but at least one heavyweight central bank now treating silver as future collateral alongside gold. Private sources tied to Swiss banking circles confirm that some BRICS-aligned states are preparing for a new collateral framework built on both metals, especially as many global South countries are silver-rich but gold short. This comes as India boosts silver imports by more than 50% and formally allows citizens to use up to 10 kilograms of silver as bank collateral, a sign of silver's re-entry into the monetary system after nearly a century. Meanwhile, tightening global liquidity, falling free float, and new export controls from China signal a structural revaluation ahead. Let's get into the interview.
COMEX has been shipping physical silver to the LBMA. So, approximately 50, 75 metric tons. In China, through my sources, I'm aware that potentially, I'm going to say that in quotation marks, right? Because we don't have a official source, but through my contacts, tell me the ICBC, which is the Industrial Commercial Bank of China, which is also a LBMA member and a LBMA clearing member, helped out the other LBMA members such as JP Morgan and leased approximately 50 metric tons of silver to the LBMA. Now, I also heard that not all the silver actually went to the LBMA in London. Some of them just directly went to India, like let's say 25 tons. So, safely speaking, I think over the last month since the crisis that you mentioned, I think LBMA probably got like 75 to 100 metric tons of silver. But according to guys like David Jensen, I mean, like that silver is already spoken for. So what he means by that, and what I mean by this, is that whatever silver that the LBMA is getting from the COMEX and also the leased ones from China, which is minimal, like I said, probably around 25 tons to London, already immediately got shipped out to customers who are standing for physical delivery. That the Shanghai Gold Exchange is setting up offshore vaults of like for physical gold, right? And potentially silver down the road. So if you're Saudi Arabia, you're Russia, you're India, down in the future, you're going to have a Shanghai Gold Exchange vault in your backyard that you can take your warrant and withdraw physical gold from the SGE vault. Okay, so that's the collateral part. What Vince is talking about, what you're talking about, and what Kathleen Tyson is talking about in terms of the chips, That's the currency leg of the equation. So remember, I don't know if I explained this to your audience on your show, right? When you have a repo agreement, you have the collateral leg and then you have the currency leg. What I mean by that is the two banks, they are entering into a repo agreement, right? Sorry, not reverse repo, repo. Okay, repo agreement. So you have that. In the past they used U.S. treasuries, but now they want to use gold. In the case of China and Russia and the BRICS, right? So the piece of physical gold or the gold contract, the warrant is the collateral, and then you would, basically get access to fiat currency, all of that, right? So that's the currency thing. So what I'm seeing is that with China pushing this initiative, it's actually getting ready for the entire system to get up and running. Okay. Because now they have like announced that they're going to set up the collateral leg through the SGE, and they are pushing forward with the currency leg. So it does make sense that they're doing that now because the collateral leg is already initiated in Hong Kong through the SGE Gold Vault. I think what stackers should be watching is the Shanghai Gold Exchange and Shanghai Futures Exchange silver vault numbers. The last time I checked, it's down to 1,400 metric tons, and that's a very low number. That's like, normally China, the two vaults combined have around 3,000 metric tons or more. So we're less than half, and it's draining. Some bad, like maybe they have a bad week of a lot of drain. They lose several hundred tons a week. So we're talking about like how much free float do they have? Maybe less than 1,000 metric ton of physical silver at the SG and SHFE. So I think China is the place to watch, and you got to see if China is helping the LBMA, which I doubt at this point. And also, I would watch the COMEX because we're heading into the December front and delivery month, as you're aware, Jesse, right? And once we get into December, and by the way, they can start taking delivery at the end of November. Doesn't need to be December, okay? That's how it works. And so, like at the end of November, if all of a sudden you have a spike in physical delivery at the COMEX, then you got to ask yourself this question: are the players in the US keeping the physical silver themselves, or are they shipping it to London to help the LBMA?
Yeung highlights a more profound structural shift in the global silver market, as physical flows tighten and major institutions scramble for metal. Recent shipments from CalMax and Chinese clearing members suggest that 75 to 100 metric tons were directed toward the LBMA, yet much of that silver was spoken for immediately, with portions reportedly rerouted straight to India for delivery. Behind the scenes, China appears to be prioritizing its own system, expanding the Shanghai Gold Exchange's offshore vault network so BRICS nations can withdraw physical metal directly, an emerging collateral framework built on real bullion rather than paper claims. With SGE and SHFE silver stocks now falling below 1,400 metric tons, the available free float is nearing historic lows. As December delivery approaches, the key question becomes whether U.S. players retain their silver or quietly send it abroad to fill shortages. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.